earnings. Next week, 190 companies will release their quarterly earnings, with notable companies including IndusInd Bank, Asian Paints, Hindustan Unilever, JSW Steel, Reliance Industries, ICICI Bank, Kotak Mahindra Bank, SBI Life Insurance Company, HDFC Life Insurance Company, and Ultratech Cement are among the prominent ones to be watched. Other companies such as Angel One, Federal Bank, Bank of India, Delta Corp, ICICI Lombard General Insurance Company, ICICI Prudential Life Insurance Company, Tata Metalics, Persistent Systems, Happiest Minds Technologies, Havells India, Hindustan Zinc, ICICI Securities, L&T Technology Services, PVR, Bandhan Bank, Coforge, Indian Energy Exchange, JSW Energy, LTI Mindtree, Union Bank of India, IDFC First Bank, and Yes Bank will also be releasing their quarterly numbers in the coming week. 2. WPI inflation. India's wholesale inflation for December is expected to be released on January 16 and is a key data point for market participants to watch. Analysts largely expect further ease in inflation numbers for December due to a fall in input prices and a high base from the previous year. Retail inflation for December also dropped to a one-year low, remaining below the upper band of the Reserve Bank of India's target range for the second straight month. The wholesale price index is expected to come in at 5.45% in December 2022, down from 5.85% in November 2022. 3. Global macroeconomic data. Here are key global macroeconomic data points to watch out for next week, including China's Q4 CY22 GDP growth rate, monthly industrial production by US, Japan and China, and inflation by Japan and Euro area.
4. FII flow. Foreign institutional investors have been consistently selling in India and investing in cheaper markets like China as it reopens from COVID lockdowns. Despite this outflow, domestic institutional investors, DIIs, and retail investors have provided support to the equity market, preventing a significant correction. The trend of FII selling in India and investing in markets like China, Hong Kong, and South Korea is expected to continue for a few more days, but is unlikely to cause a sharp correction in the market due to the buying activity of DIIs and retail investors. 5. Oil prices. Oil prices have risen more than 8% in the past week due to increasing demand from China as it reopens from COVID lockdowns and a fall in the US dollar to a 7-month low. Market participants will closely watch the oil price movement in the coming weeks due to rising demand from China and expectations that the Federal Reserve may be less hawkish given easing inflation. International benchmark Brent crude futures closed at $85.28 a barrel, up 8.5% for the week, though prices have been below $90 a barrel for the past couple of months. 6. US dollar. Market participants will also be monitoring the movement of the US dollar index, which measures the value of the US dollar against a basket of the world's leading currencies. The US dollar index has corrected since November, falling below 102 in the past week, the lowest level since June 2022, due to falling inflation and the possibility of a less hawkish stance among Federal Reserve officials. The next Federal Open Market Committee, FOMC, meeting is scheduled for January 31st and February 1st. Most experts expect the FOMC may raise the Fed funds rate to around 5.00 to 5.25% in upcoming policy meetings and then may pause. 7. Technical view. The Nifty 50 index has formed a bullish candle on the daily charts and a long-legged doji pattern on the weekly scale, indicating indecision among investors about the future market trend. The index is expected to have supported 17,800 and resistance at 18,000 to 18,200, with the index trading in a narrow range between 18,300 and 17,800 for the past 4 weeks. Traders are advised to wait for the index to break above 18,150 or below 17,800 before making a move, as the market is currently in a no trading zone. 8. FNOQs. The weekly option data suggests that the Nifty 50 may remain range-bound in the 17,800 to 18,300 area for the coming days, with 17,900 as a crucial level for the near term. The maximum call open interest, OI, is at the 17,900 strike, followed by 19,000 and 18,000 strikes, with call writing at the 18,300 strike, then 18,200 and 18,400 strikes. On the put side, the maximum OI is seen at the 17,900 strike, followed by 17,800 strike and 17,000 strike, with writing at the 17,900 strike, then 17,800 strike. The data suggests that there may be scope for a short covering move, but the market is expected to be range-bound.
9. India VIX. The India VIX, which measures the expected volatility in the market, fell by 3.8% to 14.46, indicating a favorable trend for bulls. A further fall in volatility may provide support and stability to the market. Market participants will be closely monitoring the VIX movement, particularly ahead of the Union Budget 2023. 10. Corporate action. Here are key corporate actions taking place in the coming week.